When President Trump signed the One Big Beautiful Bill Act into law, most of the attention focused on its impact on healthcare and social programs. But the law also delivers significant tax changes that could benefit a wide range of Americans, especially those who don't typically itemize deductions. For the first time, a portion of tip income will be deductible. You may be able to deduct up to $25,000 in tip income as long as you customarily and regularly receive tips. The Treasury Department is expected to publish a list of qualifying jobs. While this deduction doesn't eliminate taxes on tip income entirely, it could mean savings for people in restaurant, hospitality, and personal service roles. Workers who earn overtime pay could now deduct the premium portion, the extra half-time pay, up to $12,500 or $25,000 for joint filers. However, this only applies to overtime required by federal law, not state regulations or company policies. There are income caps, $150,000 for single filers and $300,000 for joint filers. This is the same threshold used for the tip deduction. Starting with the 2025 tax year, you may be able to deduct up to $10,000 in interest paid on a loan for a new U.S.-assembled vehicle. This only applies to vehicles for personal use and phases out for single filers with income over $100,000 and joint filers over $200,000. Depending on your loan and tax bracket, this deduction could save you hundreds each year. If you're 65 or older and have a modified adjusted gross income below $75,000 single or $150,000 joint, you may now qualify for an extra deduction. The senior bonus deduction offers up to $6,000 for single filers and $12,000 for qualifying couples. This could make a meaningful difference for retirees on fixed incomes. The OBBB raises the state and local tax deduction cap from $10,000 to $40,000. This helps taxpayers in high-tax states who itemize their deductions. The change could mean thousands in savings for households with large state income or property tax bills. But it's temporary. The cap is scheduled to return to $10,000 in 2030. The Act also expands a rule first introduced during the COVID-19 pandemic. If you take the standard deduction, you can now deduct cash donations of up to $1,000, $2,000 for joint filers. You'll need a written acknowledgement, and only donations to recognized charities qualify. This update makes it easier to support causes you care about while still saving on your taxes. Although the OBBB doesn't add a new child care deduction, it does increase 3 related tax benefits, including a higher child and dependent care credit for eligible families, a larger cap on pre-tax funds you can set aside for child care expenses, and an expanded business credit that encourages employers to offer child care. These changes may not apply to everyone, but they offer modest support to working parents facing high child care costs. The One Big Beautiful Bill Act brings several new deductions that could lower your tax bill, but many are temporary. If you qualify, take advantage of the savings now and speak with a tax professional to make sure you're claiming what you're eligible for.